You're listening to New Retirement Radio, brought to you by the team at Prout Financial Design.
Hello, I'm your host, Certified Financial Planner, Dennis Prout.
I'm Heidi Cartwright, Financial Advisor and RICP.
Advisors associated with Prout Financial Design may be either 1. Registered representatives with and securities offered through LPL Financial, member FINRA SIPC, and investment advisor representatives of Integrated Partners, a registered investment advisor, or 2. Solely investment advisor representatives of Integrated Partners, a registered investment advisor and not affiliated with LPL Financial. Investment advice offered through Integrated Partners, a registered investment advisor. Integrated Partners and Prout Financial Design are separate entities from LPL Financial. Dennis Prout and Nathan Prout are solely investment advisor representatives of Integrated Partners and are not affiliated with LPL Financial. The opinions voiced in this show program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriately qualified professional before making a decision.
WTCM News Talk 580. Welcome aboard, everybody. It's New Retirement Radio with Prout Financial Design here for their first show of 2026 as we say good morning to Mr. Dennis Prout. Good morning, sir.
It's so good to be here. Thank you, Ron. Ooh, and I sound a bit cold. What is this? Does everyone have a cold right now? I think that's just the deal, isn't it?
Mm-hmm.
It's like,
I don't have a cold.
Good
Heidi,
for
you're
you.
the only one.
Oh, yeah, so you don't.
Not yet.
Not yet, but I might get one
Normally,
with everyone else around me.
I screw right on by this stuff, but it's been like a week. Slow. Well, man, it is great to be here, Ron. Thank you. On January 8th, 2026.
Oh, by the way.
Yes.
It is the birthday of WTCM. 85 years ago on this date, we went on the air.
You are kidding me.
Happy birthday.
Thank you.
85. I remember 75. You know, that was a big deal. But 85,
85
man,
years
that's
ago.
like getting old. I mean, we kind of shoot for that on an average age for us old guys, right?
So you were here for
85.
the 75th.
I was, indeed. You bet. I've been here about 22 years. We were talking about it yesterday, 21, 22. Started back with Norm. Just because you asked, that was a conversation I'd had with Paul earlier. I said, we're teaching all this stuff on financial planning and retirement planning. I think we got to have a conversation on the radio about, what's going on, because there's so many hot questions, concerns people have. And, that was the back in the day when people attended classes. They were just all in line.
Yeah.
And Paul said, well, let's talk. So we talked. Couldn't come to an agreement, and then 2 years later, Norm Jones was going to be starting his own show, and Paul called me back and said, hey, we'd like to try you out if you're open to it, and if we can agree to terms. And I said, yeah. I'd had some more time to think about it, and man, we had our first shows, and wow, it was intense.
You don't know the exact date?
Nervous. I wish I did. I wish I did. I don't know when Norm started his show. Colleen might have some sort of idea.
Yeah.
But it's been an interesting run. The changes that are going on in the financial field, the retirement planning field, the responsibility shift, and we've said this before, but trying to figure out now, where am I going to draw this income? When should I collect Social Security? Do I need long-term care? All the fun stuff and not so fun stuff. How do I play offense and defense at the same time, given this wild, woolly market we live in?
When you started your
Crazy.
career, were there still a lot of people that had a pension where they didn't have to worry much about planning their retirement, where they collected a pension and Social Security?
That's what most everyone did.
Yeah.
They had a pension, Social Security. They might work part-time, but part-time was like, even working at all in retirement had its own, a negative connotation about it. Now it's like, what do you do? Aren't you doing something, man? That kind of thing. Now, not everybody wants to. They have all the time they want in the garage, if you will, or in the sewing room. That sounds so sexist. But, whatever they like doing, they tend to pursue more, word of the day, vociferously. Thinking of the garden thing over at the not open space, the garden center, the garden...
Botanical Gardens?
Botanical
The
Gardens.
Commons.
Oh, the Commons.
The
Yes.
Commons. That is dynamic. You've got master gardeners over there, like geeks of horticulture, making things grow. Vociferous.
Outspoken?
Yeah,
Okay.
yeah.
I had to look it up.
Spoken with vim and verve. So, just because you asked, Ron, the markets, there's so much to talk about in so little time. First of all, Dennis, who's with you? Heidi Cartwright, thank you very much, RICP and Executive Director. Good morning, Heidi.
Good morning. It's my pleasure to be here today. I can't believe we're already at 2026.
Great to have you. Gives me some time to cough. And then Nathan Proud, our own Master Elite Advisor with Ed Slott and Company and our Managing Director. Good morning, sir.
Good morning. It's great to be here. I have access to that lower register that's given to me by that cold recovery as well this morning.
Yeah. And then our own Marketing Director, Beth Shire.
Good morning. It's great to be here, and I want to wish everybody a happy 2026.
Happy New Year.
Right.
And, she helped oversee the change and improvement, significant improvement to our website. Man, we've had several comments about, honestly, what fun it is to view it. So you may want to check it out. proutfinancialdesign.com. Now, we're talking about so much that's going on in the markets, but in terms of the program here, we're pretty excited. We are trying to get the president of our company on the shoe in May. We're going to see if we can work that out schedule-wise and all the rest. He would actually be here live and in person and in the flesh, as they say, baby. So we're looking forward to that one.
What company would that be then?
Integrated, our own registered investment advisor.
Okay.
Integrated Financial is the name of the company. Integrated. They oversee us, do all our compliance. Thank you very much. Keep us legal and also invite us into extended conversations to help train us and encourage us to the future, given there's that much going on. By the way, if people should have a question of a financial nature, where and how would they get in touch with us? Please, Ron.
They could phone us on the telephone and be on the air and ask a question, or they could text that to us. And either way, it will be the same phone number, 231-947-0023, 231-947-0023.
Before we get into the material, last week was going to see the kids out in Milwaukee, and I'm thinking, well, we got all these grandkids with us, 8 of them. They're going to be so bored. What are we going to do to help them keep them mesmerized, if you will? And they had planned all these things. First of all was the Mitchell Park Horticultural Conservatory. 3 huge domes that were just mind-blowing, not exaggerating. So if you're into horticulture, can you say it? Plants, desert, tropical. It was amazing in Milwaukee, Wisconsin. And then the public museum there was incredible too. They had their own, what do they call it, a mastodon or whatever?
Oh, a mastodon.
Like 35 miles away. They found it in the dirt somewhere,
We used to have mastodons in Michigan.
Did we?
Yeah, we did. Yeah, we did.
Mastodons on Michigan, you could call it Mom. Keep it easy to simple,
We come up with a lot of acronyms in our industry.
That's almost like an RMD, right?
From
So-
IRA.
Yeah, last year was amazing in terms of returns. That just thinking back, what were the returns on financial assets? Now, not all financial assets, but some real assets too. Number one, gold, 58%. Silver, 75%. 75%. So silver ended the year around $75 an ounce. $75. Incredible.
I had a guy
Incredible.
many, many years ago told me I should just go buy a silver coin every week and put it aside. Did I do that? No.
I guess
Shoulda, woulda,
Nope.
coulda, right?
Back when it
My
was
old friends.
13, 14, 15 bucks an ounce. Now it's, what'd you say? Like went up.
It's 75, about
Yeah.
right now. But who told you that, Ron?
Somebody in this room.
Yeah. So what's next? That's what everybody wants to know, right? Who knows? That's radical. I honestly, I thought it was a value. I thought it was a darn good value at that time. The reason why, just because you all wanted to know, why? Because the continued spending by the federal government, the importance for that politicians are placing on growing economies. They're not willing for their voters to have pain and suffering. Pain and suffering don't work with the populace these days. Well, we need to tighten the belts. Who has last said that and had any votes? Not many.
Yeah. Mm-hmm.
So what do?
Winston
They
Churchill.
inflate us out of it. They inflate us out of it by pushing more money into the system. Now, whether or not you believe it's a good thing, what does it cause? Cause and effect. Thank you so much. Cause and effect. The effect is people with wealth seek to preserve that wealth by owning real assets, real estate, gold, silver, etc., etc. Okay? Now, the Dow, they're predicting, by the way, that it might hit 50 grand by the end of this month. 50,000. 50K.
Sorta
The Dow
crazy.
last year was up 13%. The S&P 500 up 16.5. Well, yes, that was all the Mag 7. So what? It was an index nonetheless. And what if other companies pick up the pace this year, which they could well, because they've been relatively obscured by the Mag 7. Who's the Mag 7? Anybody?
Apple,
Apple,
Tesla,
Google, Tesla.
Microsoft.
Speaking of
Amazon.
Mr. Tesla,
Amazon.
he
Oh.
might what, Nathan?
Yeah, they were saying that this is actually part of one of Beth's stats. So, Beth,
Uh-oh.
can you
Oh.
start with that stat, and then I'll
Spell it
add
out.
the little part to it as well?
Yeah.
Do that, please.
So Elon Musk becomes the first person worth $700 billion after the Delaware Supreme Court reinstated $139 billion of Tesla stock options that were voided last year.
Put it a
It's from
different way.
Reuters.
That's $700,000 million. Billion is a
700,000
big
million.
amount. 1
Yeah.
billion is
Yeah.
1,000 million.
Yeah. That's
It's a
Yeah.
lot.
Right.
Achila madre.
Well, and later this year, well, obviously we'll see what happens, but they're predicting that Elon Musk could become the first trillionaire, with SpaceX planning to go public in 2026.
Now, it was interesting. We were talking about this 3 to 5 years ago. We were talking about King Solomon's worth, just to get people, kind of thinking about compound interest. If I save $100 a month, that sort of thing. So, King Solomon at that time, now this is simply recollecting, about 1.2, 1.3 trillion. But we were just talking about this. It was mostly in gold and silver. So, of course, given today's value, 3, 4 trillion. So Elon's still got a way to catch up.
He does,
That makes
but
anyone feel better.
But that's when
But
you say
1
he has
trillion.
$700 billion.
Yeah.
That would be the net, his net worth, and most of that's what, in stock in all of his companies?
Yeah, and the value of his companies.
And if the stock goes down, he can lose hundreds of billions.
He could.
Yeah.
Does anyone care about that, or
No.
do you see that in the headlines? No. Thank you very much. So obviously he's got some of that at risk. Some of that he's swinging in the wind, if you will. He is taking some risk. Because it was just
a lot of risk.
Yeah. In essence, it was only a few short years ago. He was trying to make Tesla survive and get through it. That was 4 or 5 years ago. When they were having all those trouble with production. So these people, if you will, that are worth these billions, guess what? They took risks most of us would not even come close to. They wouldn't even come close. Because, well, they're worth, just speaking on the other side of it, they're worth $500 million. What's $100 million cost? It can be scary.
Right, and the ones we hear
Scary
about
still.
are the ones who are successful.
Yeah.
There are a lot of people out there who try and don't make it. So
Yeah.
there is a risk.
It could go the other way. It could go the other way. And all of a sudden they're liquidating and having to go as fast as they can the other way. And sometimes that's very painful. Very painful indeed. So the Dow, 13%, S&P 500, 16.5%. The Maskey, Europe, Morgan Stanley something. Morgan Stanley Index.
Capital.
Capital Index. Thank you. Capital. Up 35.41%. 35. That's not in your notes there, Ron. Sorry.
Yeah.
35. We just wanted to give some perspective. So, wow, that means foreign markets. What can we learn from that? The prognosticators are not always right. The people who look at the future
They didn't predict this.
can be, I'm not going to say the expletive with that, can be dead wrong. You can put your own moderately negative term with that. They were dead wrong. So if you wanted to double your money in terms of return, not doubling your money, but doubling your return, have some international last year. Well, it's too late now, isn't it, Dennis? Yes, it is. Is it too late for the future? Maybe not. Next, the Maskey EM Index, emerging markets, up 33.57%, almost at the same amount. Emerging market stocks. Japan Index, 24.6%. The Mag 7 themselves up 22% last year. So it's incredible, those returns. It's also incredible. Markets are broadening according to Capital Group.
Yep.
But it looks like it's expanding, but it also could mean that we are ready at some point for a market pullback in 26. That would not be surprising, is the headline on page 7 of our notes. A market pullback in 26 would not be surprising, given this has gone on now for 3 years. 3 years.
Yeah.
So don't be surprised. Could it be an opportunity? Perhaps. But will you be comfortable doing that? Probably not. Probably not. So when you're investing, keep in mind history, and keep in mind that obviously diversification is key, but your own comfort levels and where are the opportunities in future. We're going to look at that here after the break. What are the opportunities around the corner that might help you get a better return than what you're getting at the decline in the bank, given that they're paying now 4, 3, 2.5, all the rest.
Two quick comments.
Oh, yeah, sure.
On the text line. Heidi, wash your hands and don't touch your eyes or nose, and you won't catch a cold.
Oh,
Thank you. Thank you for that advice. Yes, I'm sitting a little bit farther down the line than usual.
She's keeping her
from these
distance,
guys.
you know.
And somebody wrote, the Magnificent Seven to me are Yul Brynner, Steve McQueen, Charles Bronson, Robert Vaughn, Brady Dexter, James Coburn, and Horst Buchholz.
Buckles? Yeah,
That was the Magnificent Seven.
Yul Brynner. Oh my gosh, what was he in the 10 Commandments? So let it be written, so let it be done. That is so good.
That's the King and I.
Oh, yes.
No,
Loved
that wasn't the
him.
King and I. That was 10 Commandments.
Oh, okay.
Yeah. That's such a cool outfit, all skin on the top. It's like, he's in pretty good shape. Yeah, Yul Brynner. He had such a voice. People made fun of him all the time. He could talk so fast. I mean, he could talk. Wow. I mean, Speedy Gonzalez when it talked to manipulating the language. Heidi, please, yes.
All right.
Is it my turn now? Yeah, sorry. Shut up, Dennis.
Right, so we are looking at an article that comes to
Sorry.
us.
Hang on a
Okay.
second. Ron just pulled up a picture of Brenner in the Ten Commandments. Oh, that's great.
Dude.
He looks like Tutankhamun.
Yeah,
there.
King Tut, he does with that headwear.
King
Yeah,
Tut.
headdress.
Yes.
You do.
All right, go
He's
ahead.
got some interesting headwear
does.
in those pictures. So, yeah.
What else?
All right, now getting back to some financial information here. We're looking at an article that comes to us from Capital Group. It is their outlook for 2026. And so there's going back to that question that Dennis raised earlier in the show. So what's going to happen next? Well, none of us know what's going to happen next, but we always are looking and trying to anticipate what might happen, what could happen, and sort of try to navigate our way through that period. So there is a consensus out there that earning estimates for the new year are looking brighter, largely due to declining interest rates, government stimulus, and a string of recently announced trade deals. And that's important because if we remember 2025, the big to-do was the tariff. All the tariffs coming out, our day of liberation back in April. And that really added a lot of complexity and uncertainty in the markets. We saw a lot of volatility and a lot of fallout. Especially in April, there was a big downturn. Wasn't there, Dennis?
Such a short time ago, and that was significant. I think the Dow was down about 20% then. And what was interesting about that was who was buying? Individuals. Institutions backed off. What drove the market back up? A significant portion of that drive was individual investors jumping in, hand over fist. They thought it was a good value, and guess what?
Yeah.
They were right. Big time. Yeah, there's the Dow. It was to about 40 grand at that point, and ended the year, I think, about 46 or so. Most people would say that's about 15. No, that's more than that. 46,000. Yeah, about 15% up from that point. Yeah.
Definitely noticeable.
Mm-hmm.
Yes. So one of the areas that they're looking for growth is emerging markets. They're expected to enjoy the strongest earnings growth coming up. And so that made me ask the question, does everybody know when we throw around the term emerging markets, what does that mean?
Great
Emerging markets, the definition is the economy of a country that is undergoing a transition towards a greater economic growth, greater global business engagement, and greater industrialization. So really going from that agricultural type of economy to a more industrial type. And so what would be some countries that would be an example of this today? China is considered in that group. India,
They're still considered an emerging market?
according to
Yeah.
Wow.
Investopedia.
Yeah, okay. Interesting.
And
Interesting, that's right.
India would be another one. Brazil, Mexico, Indonesia. So some of these countries, that's what we mean when we're talking about emerging markets. That's who we're talking about. So another positive outlook that they are talking about is that markets are broadening. This is a good sign for investors, they say. And this is something else that Dennis had mentioned earlier in the program when we were talking about that Magnificent Seven driving a lot of the return for the year. But we're starting to see more companies do better across the board. It says within the U.S., a greater number of stocks have also joined the market rally, with nearly 60% of the S&P 500 companies trading above their 200-day moving averages as of the end of November.
Okay, hang on a second. Now, what does that mean?
Yes, Dennis,
60%.
what
Everybody
does-
knows what 60% is. It's about 2/3. But why would that mean anything to someone saying, well, what the 200-day moving average? I mean, really, what is that?
That's the trend.
That means the trend is higher. That means their prices are coming up. Big picture, if you will. It means that there's an expansion, and it tends to mean a more healthy stock market because the rest of the stocks are starting to participate. Cool. Yeah. Go ahead, Heidi, please.
All right. So moving on to some more interesting ideas that this article brought up for us. They start talking about dividends can smooth the ride when markets are choppy. And just to remind everybody, dividends are the distribution of a company's earnings that is decided by the board of directors and paid to shareholders. So that's your common stockholders. You can have exposure to this through mutual funds, through ETFs, through owning actual equities. So that's what they're talking about, the dividends, that money coming back to the owners. So investors would
It's basically
Yep.
like an interest rate. So the dividend on that particular company is at 3%. If you're paying $10 a share for it, how much is it paying you a year? It's not a lot, but 30 cents a year. It's 3%.
Well, and dividend companies too are very well established companies, especially those with a history, obviously, of increasing dividends as well.
Exactly. They tend to be the more mature companies
Right.
that have a market share already and are paying back their profits versus like a company in a growth mode that's brand new. They're just plowing all of their income back into growing the business.
Right.
And they don't really have that depth to be paying the stockholders, and the stockholders benefit if they continue to grow by just the cost of the stock going up and not really by the dividends.
Yes.
So investors would do well to remember the important role dividends can play in a stock portfolio. They have historically been resilient during market declines, but have also generated positive returns when markets have advanced. So they're saying you can benefit in both circumstances. In those times when the market is maybe declining, having that money come back to you as dividends tends to mitigate some of the impact of a downturn. But it's also great in times of upturn because you're having additional revenue come back in.
It's really kind of nice.
Yeah.
The benefit for owning the stock, not only the hoped for increase in value, but then also the dividend, which you can, in some cases, if you like, reinvest to
And
improve your rate of return.
And it's important for people to know that investors can find dividend opportunities among companies across the world, not just in the U.S. Companies that are located outside of the U.S., they can be dividend-paying companies as well. So it adds to that diversification, so both inside and outside of the U.S. Which brings us to an international look. It says Europe's investments could propel markets. So what are they talking about? They're talking about some of the recent changes and change in strategy by some of the European countries. Europe is investing in its future, and these results can trickle down and impact us as well.
In some cases, they have no choice. Given the political ramifications of Trump right now, it's rather obvious. If they're going to stand on their own, they better start investing in some of their own defense contractors and/or giving more space for that. And what does that have to cause? In essence, their economies have to grow to support that spending. If they're going to spend 5%, their governments, let's say, on defense, it means that their revenue better increase as well. Because they don't want to cut spending and/or raise their debt levels too much. Given that reality, and they want it to grow, how are they going to help foster that? Might be a part of that conversation.
Right, and they give as an example Germany. They talk about how Germany has instituted a 500 billion euro infrastructure stimulus. This is about 12% of its GDP.
Whoa.
And it is set to reshape Europe's economic landscape, with half of the spending expected by 2029. So that's really in the near term when we're looking in the future. The aim is to boost growth, spur competitiveness, and strengthen the regional security.
What page are you on? That's really good. I like that. No, seriously, what page are you on?
I'm seriously,
13.
I'm on page 13.
Seriously, on page 13. Ooh, look at that. Don't say that number out loud too well.
So if somebody wanted to steer some of their retirement portfolio into, as you say, Europe, is there like funds that specialize in that?
Yes.
Okay.
International funds tend to. Now, you can look at the histories. You can look at the risk that those funds have. You can include it as easily as a part of a portfolio these days. It's really quite simple. Now, are we saying that is a for sure investment? Of course, we can never say that. We're just saying that the diversification potential that this allows, as well as the growth potential, could be helpful. Thank you, Dennis, for dumbing down to me. But we have to say it that way for our own compliance means. But just to know, there are other places that can help and or assist with improving your returns without betting the farm. Okay? Go for it, Heidi.
So, well, another thing I thought in this section worth mentioning is NATO. More broadly, NATO's pledge to raise defense spending to 5% of GDP by 2035 is another incentive and another thing they're looking for that growth in the European sector.
By the way, speaking of Euro, are we going to buy Greenland? What do you think, Ron?
I don't think it's for sale, so I don't know what there's no for sale sign over there.
Yeah.
But they say everybody has their price, right?
Yeah. Right.
Well, what's the chance? I'm just curious. What do you think, man?
I'd bet against it now.
Would you? Given the whole worldwide cacophony?
Yeah, I mean, it'll take a while, put it that way. I think if it happens, Trump wants it by the end of his term, which is what, 2028?
28.
So a lot of things can happen between now and then.
It sure could.
Speaking of that, what's going on in Iran? They have, the people are out in the streets. Right. They're maybe possibly overthrowing that government there. Someone asks, what are your thoughts about the Iranian, is it rial or rial, their currency, the rial? Is there a legitimate buying opportunity there, given its recent substantial devaluation? And
quick answer, no.
No.
So here's what the deal is. I saw an ad, or just because you really asked, for pennies. They're not going to be producing those anymore in the United States.
Right.
Mm-hmm.
So you can buy 50 pennies, Ron, online for $10.
I saw that ad too. I'm like, what?
Uncirculated pennies.
Where do I sign up?
Imagine that. $10. So you're limited, Ron.
Yeah.
To 20 of these coin packets, which are 50 cents a piece, to 20 of them. Now, how many would that? How much dollar?
$10.
$10.
Yeah.
He's quick.
That's quite a margin there.
In essence, no kidding.
We're in the wrong business, guys.
To pay, no kidding. $200. Okay, I'm not belittling this question. I really am not. But it's the same kind of thing. I mean, I could decide to pay $200 for uncirculated pennies. They look so shiny. Or I could go down to the bank and pay $10.
Yeah.
And let's say I want to turn them in. Well, if I turn it in 5 years, will the uncirculated pennies be worth more? What would a coin dealer be willing to pay you? It's worth 10. I'll give you 12. Okay. Wow.
Right.
All right.
And I think too, part of what you're trying to hit on, Dennis, is that foreign currency investing is a whole different animal almost than really anything we're talking about on a regular basis.
Yeah. So
so part of that, like if you were to buy that Iranian currency, you have to then have faith of what's going to happen in the future of the country. So do you see good stability, about to happen with them, and therefore growth opportunity and everything else that comes along with it? And yeah, maybe you do have a great case for that. But if you zoom out or zoom to a different idea almost entirely, it's like, do you have faith in some of the other S&P companies that have been out of the view of the Magnificent Seven, like maybe some of those higher dividend payers? Do you see other options, even if you wanted to diversify straight out of the U.S. with pure international investing? And there's just so many other opportunities. Of course, there's no sure things. I get it.
Yes.
But there's so many other opportunities that I personally would explore before foreign currency investing.
Sometimes.
And I'm not saying it's always a bad idea by
No.
any means.
Many times I'll say it's what's right in front of us. It's not looking over the fence, if you will. What's over there? Many times, most of the time it could be said, they're right in front of us if we're willing to say, oh, where's the value here? Google just got upgraded this morning. Google. Well, the discount to Google is, oh my gosh, everybody's heard of Google. Well, their return last year was eye-popping because the case against them evaporated in terms of the expense that they were anticipating. They were going to have to pay to cover their the internet.
It was like a lawsuit
website.
or something.
Yeah, a lawsuit that was pending. And so today they're up 3 points. Not a lot.
Let's see. From 1 year ago, what'd you say? 1 year ago, they're. Let's see. That's the 1 year chart there.
It is.
How much did it go
You
up?
got it. 68%
Oh, there it is. 68%. Jeez.
in 1 year.
That's pretty good.
And even though everyone had heard of them, everyone had said, "Well, oh my gosh, really? How can exciting can that be?" So the reality is, often, it's right next door. So steel yourself, if you will. They could turn it around. Obviously, Iran could turn it around, and why wouldn't we want that to happen for those people over there? We would, but I don't know that I'd bet right now. Yeah.
How does Google make their money? Is it primarily advertising, do you know? Or is it like
not
selling
primarily advertising? They've got 6 major businesses going on, Ron, and they're so diversified. It is advertising, but it's their search engines. It's amazing. I can't even name them all.
They've got all that marketing information on everybody who does a search. They've got those.
I mean, they're a verb now. Google it.
Oh, yeah.
So once you hit that your company name is a verb.
Verbdom.
What's that?
I think that's a whole new
Verbdom.
level.
And one of their co-founders went to Interlochen right here in our backyard.
That's
How about
crazy.
Larry Page.
Yeah,
Very
their industry is internet, cloud computing, computer software, computer hardware, artificial intelligence, and advertising.
Wow.
Just one
they're,
industry.
They're
right?
right in the AI game.
Right.
And they came on very slowly with that, and the amount of work that they put behind the scenes to make certain that they could make it work properly was more than most other companies combined in terms of the resources that put into that. And when they launched it, it was a rocket ship. So there you have it. All right, so next, Nathan. Now, we're not going to go long on this, I promise, but bonds should offer ballast. Is that like what's in the bottom of the boat?
Mm-hmm.
Well, first of all, who does not want to talk about bonds for
Everyone
almost
raise
a
your
full
hands.
hour?
That's so exciting.
I mean, so bonds.
You're so excited.
Bonds. All right. So economic growth prospects are up, just as job growth is weakening. For investors, this unusual backdrop underscores the potential for bonds to offer steady income and a measure of downside protection.
Always?
And see, that's the funny part. Traditionally, it was always until sometimes recently. So
Except when it doesn't.
60% of the time, right. But looking back at this historical graph here about bonds offering balance when stocks decline.
Ron pulls up a picture of Sean Connery in
Bond. James Bond.
Oh,
That's
so
such a great
cool.
line.
But it's more like bonds,
Bonds.
investment grade bond. But yeah, anyway.
A different kind of bond.
So, yes, typically when stocks go down, bonds hold steady or go up a little bit.
Correct.
That's what they're designed to do. And that worked, except in parts of 2013, 2020, 21. Definitely didn't work in 22. Didn't work so much in 24, and didn't work in later 24 either. So,
But other than that,
but other than that, yeah. So it's just bonds can offer ballast, but you need to get into very specific what types of bonds. It's not the game anymore of every bond is a safe bet, I guess, is really what they're getting at with the heart of this article. So short-term bonds may offer income and defense, and that is where we have seen most of the opportunity with bonds recently is those the short-term inflation bonds, or even the treasury bills, the 1 to 3 to 6 month treasury bills. And obviously we're not saying those work for everybody, but as far as what's in the bond space. But if you have a bet that the interest rates are going to continue to decline throughout
Which is a
this
pretty
year,
good bet this year.
right?
Yeah.
Again, there's no sure thing in anything that we talk about. Then you could look at some longer term bonds as an opportunity right now and lock in that higher interest rate.
And I would say, as an adjunct to that, because they've done poorly here recently, and because interest rates were at historic all-time lows in 21, 22. That's why bonds have performed poorly. Well, guess what? Right now, the 30-year bond is at about 4.8, 4.9, depending on the time of the day. Given that reality, if that rate continues to decline, which the thinking is it will, even intermediate term, 10 years, 10-year note, that could drive balanced funds. If you want a way to bet on the market, if you will, but have some backing or backup, you might want to take a look at a good balanced fund. As much as sexy as that sound, I'll just use that phrase. Oh, I've got an exciting balanced fund for you. Well, guess what? There's some good balanced funds last year. Can we state returns on the show? What they actually did? Can we do that with compliance? I didn't name a name. I'll just say it. It was up 19%, 19. But of course, it can go down as well. Those can go down. So the returns there can be relatively compelling.
Competitive too. Yeah.
Competitive.
Yeah.
And can be a way to help control risk so that you can maintain your position when the prices move against you.
Right.
That's the goal.
And, those mutual funds that offer those balanced funds too, you can then determine if you want the 70-30 mix, so 70% stock, roughly 30% bonds, and then trust them to be picking the term length on those bonds for you, so you don't have to dig through everything. And that's, of course, part of the advantage that a mutual fund can offer to investors.
Also, the advantage that an advisor could offer in helping you pick those funds and say, who's on first? Okay, we have a question.
A couple of messages or questions. Handyman Dan here. I'm looking for help setting up an LLC and a non-guarantor irrevocable spendthrift trust. Can you help me with that or direct me to someone who can?
Yeah, speak to a trust attorney.
Okay.
And given that you already have an investment advisor or counselor, speak with them as well as to why you're going with that sort of complexity, and indeed if it makes that much sense. We have referenced several attorneys. We've also had Courtney Danbrook on the show before. Danbrook, Adams, Raymond, right there across from St. Francis on Division. Danbrook, Adams, Raymond, or DAR. Courtney Danbrook.
Someone would love to hear Dennis's thoughts on what immediate changes might come about when the Fed chair, Powell, is replaced.
Yeah, they're saying the gentleman who's going to be replacing him, no matter who it is, will be much more dovish, if you will, and softer on, not crime, not going there, no thank you, softer on interest rates. So interest rates could go down more than 0.5% this year. Really? Yes. So, given that reality, that could mean a bigger bolsterer for the all-exciting, enthusiastic bond fund.
All right. And
Good
we have
questions. Thank you.
How many bonds have there been? Will there be a new bond? Oh, these are not financial questions.
Really?
I think that's the other bond.
I think the more important question is who is your favorite bond? You know?
Yes, yes, that could be a discussion.
That's right.
I remember being introduced to bond by a friend in college who was a bond fiend, man. And oh my gosh. Yeah, some pretty good Bond movies out there in the past.
7 actors have played James Bond. Let's see, Sean Connery, George Lazenby, Roger Moore, Timothy Dalton, Pierce Bronson, and Daniel Craig.
Yes.
So
Who was
FYI.
your favorite, Ron? Was there such a thing?
I could go with Sean Connery.
Yeah, he was so good.
yeah.
And say that impacted, he said it impacted his life so much, that's why he dumped it. He couldn't, the fame was that powerful to him. It just impacted him so dramatically. And are we out of time
Bond. James Bond.
we missed
do you have a
the
stat
stats there,
or
Beth.
before I want to
okay.
leave
One
it?
you can share.
Oh, we did one stat already.
did.
Do you
I
want to do one
did,
more to leave
yeah.
us with or no?
It's okay.
Okay. ProutFinancialDesign.com. New website, video, lots of information, contact information. You can listen to past radio shows all there on the website.
That's
Beautiful.
Prout Financial
Sure.
Design.
231-947-3992. And thank you for listening. And man, we are looking forward to 26 with you. Thank you.